ArcelorMittal South Africa has felt the impact of global commodity crunch, which we've been talking about for so long, and it's reflected in its half-year results released earlier today. The company has posted a loss of 109 million rand, with export sales having decreased by 29%. Alec Hall caught up with the CEO, Paulo Flaherty, to discuss the company's outlook for the steel industry, with demand falling worldwide due to a slowdown in China's economic growth. Don't miss this one. Here it is.
I think the analysts were expecting what we've said. Maybe people a little bit surprised. We actually made an operating profit, which we did. There was quite an effort to do that. But at the end of the day, we didn't cover our interest bill. So it's a loss for another half year, which just continues.
The cash flow statement's worrying now, really worrying. You see a net outflow of nearly 2 billion rand in this period, 6 months. How much longer can you keep going?
I think about 1 billion rand of that is investment into stocks. So it's a balance of, do you continue producing or do you slow down? So we produced at 80% capacity and we built up quite a high stock level. The goal for the next 6 months is to reduce that stock level significantly, and we're going to curtail production, and that will bring our cash and borrowings back to an acceptable level.
But even best case scenario, you would still have an outflow of 1 billion rand every 6 months. How much do you have?
No, next 6 months we'll claw it back, because we've invested the billion in the stock, and we'll claw those stock levels back again.
So can you be cash flow positive? I think that's the question.
We can. Yes, we can. Yes, we can be cash flow positive. We do have borrowings from the overseas group company, and we do have overnight facilities from all the banks. So we have more than enough facilities where we sit today.
So how bad then is this Chinese dumping? We've seen reports internationally that you have gone to the World Trade Organization. Is that accurate?
We haven't gone. The World Trade Organization has duties that have been approved for South Africa on steel. Those duties happen to be 0%. We're asking that those duties be put up to the bound rate, which is 10%, as an initial emergency measure. The second is that there's about 4 products we believe that are being dumped into this country, and we want to then also have anti-dumping relief against those products.
At what prices are they being dumped?
Below their cost, way below their cost.
Below your costs?
Below their own costs.
There was a figure of 25% that was mentioned.
Absolutely.
25% below your production costs.
And it's also below their production costs. So we have all, and anti-dumping, you've got to have your evidence. So we've seen many countries in the world implement anti-dumping in the last 9 months against China specifically. So there's evidence out there in the world that this is happening for the very same products we're talking about. So we want to also ask for relief for anti-dumping.
So it is from China, which is a member of BRICS, which brought South Africa into BRICS. Politically, it's a hot potato for you.
You know, look, it comes down to this question we've been saying about the steel industry. Is the steel industry an important weapon for South Africa? Do we want to industrialize through having your own steel capacity as opposed to just importing all your steel? That's what this is about. So this is a protection for them, not just ArcelorMittal. This is an entire industry at stake.
We're seeing Evra's Highveld teetering at the moment. What the bottom line? Can you keep going if there's no duty? No. We will. I spoke this morning about the low road. And the low road scenario is that you would have to restructure our organization. We would have to scale down. We would have to cherry pick the products we want and concentrate on where we make the most profit to survive. And what would that mean to staff, to jobs?
Unfortunately, in that scenario, it's job retrenchment.
How many though? What?
Difficult to state. Difficult to state, Alec. At the moment, we direct jobs 13,500. And we have a capability of producing 5 million tonnes. If you scale down and say you're only a 2 million tonne producer that you can do profitably, then it's almost a 1-for-1 in terms of the people you need. So you could halve it.
Interesting reading through the commentary to the results as well. You say that many in South African industry have been finding ways of improving productivity. You didn't say robotics, machinery, etc., but is that something you're considering?
Yeah, we have improved. We measure productivity as steel per person per year, tons of steel. That's improving all the time at ArcelorMittal. There's nothing wrong with the state of our plant. We can get more efficient. We use the group extensively to help us with technology issues. We have invested in automation, but it's 13,500 people, and we need to make sure that their jobs are sustained.
So they might actually become, worst case scenario, more robots than human beings. Those are the realities.
That's not our intent. I mean, our intent is to keep the 13,500 jobs.
Paul, what about iron ore, the prices? It looks like you got the worst of all scenarios now with what happened with Kumba.
We have. We paid in the first half 60% more for our iron ore than export price parity. That's just not sustainable.
And how big an input is that in your overall costs?
Total raw material basket is 50% of our total costs. Iron ore accounts for 70 of that 50, so it's 35% of your total cost for a ton of steel is iron ore.
And what is the discussion, or are there any discussions that you can have with Kumba to change
There
that?
are, and there's discussions with Kumba, there's discussions with government, Department of Mineral Resources, because it's not a take or pay from our side, but it's an obligation on their side to supply what we need. So we need to sit down and have a discussion about the cost base, because it makes steel very uncompetitive, and it can't be the solution.